Hello friends, my name is Deepak and today in our studio I have with me Sanjiv Gupta CPA. I'm pretty sure many of you guys already know him. But today I'm going to talk to him about a very special topic which is very popular among business owners. We have a lot of entrepreneurs right here in Bay Area, and a lot of you guys want to start up your own company, and a lot of you guys want to start your own small businesses. But one of the key things that comes out is what kind of business entity you should choose. And quite often we hear two words, which is S corporation and C corporation. So today I'm going to talk to Sanjiv a little bit about these two business entities and see how they differ and how do they impact taxes at the end of the day. So Sanjiv ji, first of all, welcome to our show.
Good morning, Deepak.
Thank you very much for coming in. And like I asked our viewers here, we're going to talk about S corporation and C corporation. I know they're very popular topics and we get quite a few questions on those. So let's start with S corporation. I mean, how is that different from, let's say, C corporation?
Yeah, we see that whenever we talk about corporations, when we talk about setting some business entities, the two words like you said, C corp and S corp. So when we start any business, by default, corporation is always a C corporation, means it's a regular corporation. We have to convert that C corporation to a S corporation by filing Form 2553. Now, I have seen a lot of people in my office. I have talked to many people on the phone. The first question I ask them is, are you a corporation, S corporation? And you know what? The answer is yes. The next question I ask them is, did you file this form 2553? And they say, which form? So I say form 2553. I did online, maybe they might have done that work. I don't know which form you're talking about. Then I say, okay, please come to my office, call the person whom you are registered, bring that form to me. And you know what, when they come to my office, what they bring? The articles of incorporation, some Secretary of State annual statement of information. That's pretty much it. I said, I don't see that form 2553. They say, I talked to that person, they said, well, your C corporation never told me to file that form 2553. So this confusion always exists, and people think they are S corporation, but they are C corporation because they have not filed that form 2553. And that form needs to be filed within 2.5 months from the time they incorporate the business. That's a regulation. They can file it late. There are provisions on that. There's a revenue procedure on this. Filing late, the 2003-43 revenue procedure are there, which has been updated now. So there are certain procedures which we can adopt when you file late. We can file with the tax returns, but they should tell us all those things. When they come and visit us in their office, they have to filed it so that we can properly file a return.
So if I'm understanding you correctly, what you're saying is many times people are just confused between C and S corporation just because they think that they're S corporation, but essentially they are still operating as a C corporation.
C corporation, because that form is vital. Now coming to the differences, see, C corporation is as I said, is regular corporations, are meant for big companies, are meant for people who are looking for investors, are meant for people who want to provide more benefits like fringe benefits, medical insurance, or it's meant for people who make a lot of money on their personal taxes, can't do S corporation, can do a C corporation if they want to do some contracting, let's say $50,000 worth of income, because tax rate in C corporation is 15%. They can take advantage of that lower tax bracket. Other than that, I don't see any advantage of C corporation. One more advantage, yes, non-residents, like people who are in India, who are looking, or in Mexico or China or Australia or Canada, who wants to start a business in US, that's a good route to do a C corporation for them, right?
Because or a partner.
Or partner. No, partner, yes, because there is no tax withholding requirements on payments to them. Of course, if they take the payment as dividends, they have to take a tax ID number and file a tax return. So other than that, C corporation is not recommended. S corporation is always recommended. Why? Because 80% of this business in US are small business owners. So what is the advantage of S corporation? Like for C corporation, you can't take the money out easily. You can take the money out in C corporation either through a payroll, on which you pay payroll taxes, or you take the money out as dividends after paying tax on the profit. And then when you take the dividend out, it comes on your personal taxes and get taxed on your personal taxes. It's double tax. Plus, if you take any distribution of money out from C corporation, it's termed as as a payroll by the IRS if you get audited. So those things are important consideration. That's why C corporation is never recommended for small business owners. Always S corporation, because it enables you to take the money out. Let's say you declare profit of $100,000. You don't need to run a payroll like we do in C corporation for 100,000. You can run a payroll for $50,000, which is reasonable remuneration. For next $50,000, you can take the money out without paying the payroll taxes. Of course, you have to pay again the tax on the profit, which goes to your personal taxes, right? But it saves payroll taxes. That's why we go for S corporation. A lot of things are there. Other than that, basically there's not much difference other than this payroll tax saving on payroll and taking money out easily.
So friends, let me put this in perspective in numbers point of view. So let's assume you have a small business that's operating maybe $200,000 in net profit. If you had a C corporation and you would end up paying a corporate tax on it, so versus if you have an S corporation and let's just say you take $50,000 as a payroll and take another $150,000 as distribution or dividend, in that case, $150,000 will be only taxed as your regular income tax. There will be no payroll tax. And if I'm not wrong, Sanjiv, payroll tax these days run between 12 to 15%?
Well, you see, it's not only the payroll tax. We have to have an element of workers' comp into that also, and then insurance part also. So it's around 15%, I would say.
About 15%. So you can see the numbers right there. On $150,000, I mean, you're looking at close to $20,000 to $25,000 in taxes alone that you can save just by using that strategy.
Right.
So if you have a small business and you are currently a C Corp, I would strongly recommend that you go see your tax professional who understand incorporation and tax laws related to business entities, and they properly migrate you from C corporation to S corporation. And I think you kind of touched earlier on that. You can't just simply file a form and convert over, right? You have to follow proper revenue conversion process.
Yeah, because you can file the form in the initial stage. If you're continuing your business as C corporation, then want to convert to S corporation, there are certain rules governing that conversion. Because there might be losses that may be suspended. There might be profit that you might not take out as distribution. As I said, in S corporation, you can take the money out for the profit, but in C corporation you can't. So there might be profit that might be suspended. So you have to be careful when you do the conversion to C corporation. Tax rules are different, but of course you can do the conversion by filing that form, but make sure that you don't lose any losses which got suspended. So it's a critical event. It's a critical time. So it's always important to talk to a professional and make sure professional understands and have experience in that area. Understanding is such a thing, and doing the work is entirely two different things. We should have a person who understands it and have experience in that area.
So there you go, friends. If you are thinking about starting a new business, or you already have an existing business that is currently set up as a C Corp, or for that matter, maybe even as a sole proprietorship or a partnership, you definitely want to consider an S Corp. I know by watching this segment, maybe we didn't answer all of your questions, but hopefully you got enough idea to kind of come up with some sort of broad line that, okay, you know what, maybe I need to get a little bit more consulting on this subject. Maybe I need to learn a little bit more about it. You can definitely go online. There's plenty of information. You can find a lot of information on our website. But more importantly, I would recommend come meet with Sanjiv in person. That way you can ask him your personal questions. You can kind of bring your couple of last year tax returns. You can show it to him. This is how much tax did we pay. If we were to make this switch and use this S corporation strategy, what kind of savings are we looking at? And Sanjiv is very good at doing kind of calculations right on spot for you. So hopefully he should be able to give you some good idea as to what you might be looking. And going forward, for example, if your business going to be there for next 5 years, 10 years, you can imagine that tax savings can easily add up into hundreds of thousands of dollars. So Sanjeevji, thank you very much for demystifying this S Corp versus C Corp. Hopefully a lot of folks can take advantage of that. And I want to give you a couple of new updates that might be going on with Sanjiv Gupta CPA firm here. One of the things is we have a new office coming up in Pleasanton. So if you guys live in that area, in Dublin, Pleasanton area, that might be a great place for you to do consulting. Once again, it's coming up. It's not open yet, but hopefully by the end of the year, we should have that set up for you, and we'll start giving out that number. Once again, you can get that information on our website on sanjeevcpa.com. In addition to that, we also have a live event coming up next month. That's going to be a full day event from 10 a.m. to 4 p.m. And we're going to have a special guest there as well who will talk about estate planning. and obviously we'll definitely talk about tax planning and business entities and all that kind of stuff. It's good. The event is good for any small business owner, entrepreneur, someone who's looking to start a business, even individuals. So pretty much there is going to be something for everyone. And if I'm correct, food will be served there that day as well, courtesy of Park Lucci restaurant.
Yes.
So that'll be something nice for you guys. So definitely come out there. You can register for the event on our website. Just go to sanjivcpa.com and you can register there, or you can give our office a call. That number is 510-825-7563. And as always, guys, if you have a topic in mind that you want me to bring on TV or on radio or on our blog post, simply email me at info@sanjivcpa.com. info@sanjivcpa.com. Sanjeevji, thank you so much for coming into the studio and helping us out with this topic, and we'll look forward to hearing from you very soon.
Thank you.
All right. Thank you very much, friends, and we look forward to catching you very, very soon.